Well, good morning. Are we seeing a spike in foreclosure rates here in Central Texas? Well, stick around. I'll share that data with you here in a moment. But first of all, want to share with you the latest and greatest updates in the Austin real estate market. And I want to start with the historic sales price trend. So this is looking all the way back to 2015 to now. So this is the last 10 years on this chart of where the median home price was in the metro area. You can see pre-pandemic, you have these nice little bell curves just kind of bouncing up with that standard appreciation. And of course, we peaked out in 2022. And since then, we have been in a correction phase. This is what a correction looks like on the right side of your chart. So we've had sales go up in the spring, and they've just typically come down harder in the fall. And at the end of the year, you're at a lower place than where you started. That's depreciation or the price, median home price coming down. What we are starting to see is if you would take a line and draw it kind of through the middle of the pre-pandemic phase and assume you didn't have the pandemic, where would we typically be on appreciation? We'd probably be, not too far away from where we are now. We've been kind of hovering between that 400 to 430 range on kind of the low end of the market. I think we're still there on the median home price. We'll see how that plays out through the year. But for now, we finished the winter. That's what we're seeing on the last little right side of the chart. And now we'll see if the spring is going to bring us a bounce. So this is where we are right now on the original list prices, which is green, and the sold prices in the market, which is blue. So not a lot of data yet. We're still, wrapping up the first quarter. But as you can see here on the right side, the sold or the market appreciation is typical in the spring. We're seeing that here. We're seeing the sold prices, the medians coming up in the spring, pretty typical. But as we look at March, we're at 445. If I come back to peak last year, 454. So we're still below the peaks of last year in terms of median home price in the market. But what you're seeing is typically, why do list prices go up in the spring? It's optimism. It's optimism. Sellers are optimistic they can have a better sale. They have some aspirational list prices sometimes. And so that doesn't always work. But just know that's typical. We're going to see asking prices go a little higher in the spring, and we're going to see sales go a little higher in the spring as well. Both are typical. This is the number of active versus sold listings. So this is just how many are on the market and how many are selling, not price. And you can see we peaked out last year between June and July on the number of listings. We came down, kind of bottomed out in December. And now we're seeing those listings climbing back up again in the spring. Yet, if you look at the blue lines at the bottom, we're not yet seeing the number of sales climb. I think we will. We're still, again, mid-March. I think by the time we get through the end of March, plus that first week of April, there's still a lot of going into the MLS and cleaning up your sales and recording the data. So typically by the end of the first week of April, I do expect we're going to see the March number of sales higher than February. So again, pretty typical. We're seeing that in the spring, but we have a lot more inventory than we have buyers buying them. And so that's where you get these big gaps between the green and the blue. All right. We talked about this last week by the numbers. Not only are sales cooling a little bit year over year, but rents are as well. And here's just kind of a recap. So median sales price about 430. This was February. That's a 3.9% decrease over February 2024. So again, we've still seen Austin on a decline. Listings are up. If we go to leasing, rents are down about 2.4%. So again, not as bad, but it's because of supply on the rental side. There's just a lot of rentals in the market, and that's what's making the rent prices decrease a bit. All right, we talked about it at the beginning. I teased it. Are mortgage rates climbing or spiking in the Austin area? The answer is no, not really. So if we look at this was a report by Axios. So the share of Austin area mortgages that are delinquent or in foreclosure and compared to nationally. So 30 plus days delinquent. This means you have not made your payment in over 30 days. The total metro area, we're sitting about 2% of mortgages. Nationally, though, that's about 3.2%. So we're well below the national average. We're the orange National is the gray. If we look at 90 plus days, now you haven't made a payment for 3 months. You're basically in pre-foreclosure at that point. That's only 0.6 of 1%. And nationally, it's 1%. So again, still pretty low. And actually in foreclosure, it's 0.1%. So one out of every 1,000 mortgages might be in foreclosure. So while it's not nothing, it's not anywhere close to what you would have seen in the Great Recession or anything like that, where you had numbers way up in really double digits during that time. So mortgage delinquencies really quite low. All right, this was a questionnaire done by John Burns Research. This is asking tenants who are living in build to rent communities, what would it take for you to buy a home? What would motivate you? Well, number one, mortgage rates. And we've kind of talked about that for 3 years. We want to see mortgage rates come down. That was about 47% or half, want to see that come down. Of course, they want to find a home they would like, and they also want the prices to come down. And again, this is nationally. Good news is in Austin, we've had 3 years of price decline. So for the buyers out there, Austin is starting to get more affordable by the day. And then, of course, other things that are pretty typical. They want to save enough for a down payment, pay off debt, decide if they're sticking around. Of course, they want to make more money. But really the big ones, mortgage rates and prices, those are driving the show. All right, this was an interesting article. This is on Zillow, and this is kind of touching on insurance. What areas have higher insurance risks or climate risks, and what risks? What are they? So if we look at the map, obviously, if you look at California, fire should not come as a surprise. And unfortunately for them, those are super high risks. They also have high air and heat risks. But yeah, fire number one in LA County, Sacramento, San Francisco, super high. If we come to Texas and we find Austin, really fire risk is number one, and wind number two. And so if you are getting an insurance policy, spend a little time and look at your coverage. Find out what is your, wind and hail deductible. What is your coverage for fire? Do you need to be within a certain distance of a fire hydrant or a fire department? Do you need to have certain suppression materials on your property? Or if you live in the hills or you're out kind of in, an area where you're close to green belts, do you need to clear away some of that brush? So pay attention to that. Insurance companies are really drilling down on this now. Do you have trees overhanging your house? That kind of stuff. Really look at your policies more than ever. And of course, if we look at the Northeast, it's wind big time. So, wind is a big insurance risk to the Northeast. And as we go down to Florida, we get into heat, fire. Surprisingly, it's not as much wind as you would think, even though that's hurricane area, but really it's still wind and fire. Those are the biggest risks for insurance policies. Finally, let's talk about mortgage rates. They're not bad. So I know everybody wants 4 and 5 again, but that's probably not going to happen anytime soon. But we are seeing the decline slowly and steadily out of that 7% range and kind of sticking here in this kind of 6, 7, 5 range. And so watch the bond market. I think that's going to tell us how things are going to trend for the next 3 months. But I'd say right now, a good primary home buyer, you're probably in the mid 6s. If you're an investor, you might be right around 7, maybe 7.25. So compared to last year at this time, which was spiking up as we got into April, that was like 7.5%. We're about 75 basis points lower than that. So rates are in a better place than they were back then. All right. If you are a seller right now, inventory is your challenge. So there's a lot of competition out there. The buyers that we are seeing write offers want the nicest thing they can buy. They just want it at a price they can buy it. And so you want your home to be in really good condition because that's what buyers want. If they have to pay a high mortgage, it better be move-in ready and ready to go. The ones that need projects or they still need some work, they're really struggling in the market. If you are a buyer right now, the good news is we have more inventory than we've had in 15 or 20 years. So there's a lot to look at. I think really it just comes down to finding the right one and understand as a buyer, if you look at the nicest stuff in the neighborhood, you might actually have some competition there. Those are the ones that tend to be trending better. So if you want more of a deal, you might need to consider ones that need a few projects. Anyways, hope this was helpful. Make sure to check out our YouTube channel at Ryan Kelly Group. Click that subscribe button. You can follow us each and every week. And of course, if you know somebody looking to buy, sell, or invest, or need financing here in the Austin area, we'd love the opportunity to chat with you. Anyways, we are wrapping up the last week of March. The first quarter will be kicking off April next week, and talk to you then. Thanks.